a company that is paying a lot of dividends, let's say 7-8%, there are companies in the States that paid 9%, it has been proven historically that it's a short-term alternative to keep investors, so not to let them go during times of financial distress. So the companies just pay more so the investors don't escape, but actually the stock is going to collapse very soon or has big risk of collapsing very soon. So don't go with dividends that are companies that are paying 7%, 8%. It's too good to be true. Just the saying really applies in this case.
Good morning to you again, Francisco, and to everybody who is with us. Thank you for going to be our guest speaker. You probably remember that we had Francisco a couple of times last year and the year before, and today we are very happy to have him again. This time we're going to talk about investing into the stock market, particularly in Nikkei. And there is a disclaimer here, so this is not any investment advice, but we're going to talk about this just as a way of sharing experiences and observations, and also generating comments on this. So thank you very much for being here. Francisco, I will give you the floor right away so that we can start, and then invite everybody who is in the room to join at any point. You just raise your hand and we'll bring you up on stage with us.
Sounds good, Maya, and thanks again for the opportunity. I think the subject we're going to cover today is a continuation of what we discussed before, right? I'm at this moment 41 years old, and I wish many of the things that I'm going to share today as well, somebody had told them or taught them to me earlier, because I was told the wrong things basically, and I lost and wasted a lot of time. When it comes to investing, now, why we're talking about investing today? Because I think the world is a changing place, just to put it softly. So many things happening with pandemics, wars, looming recessions, etc. So it's kind of total chaos if we read the news and read social media. So that got me thinking in the past years, okay, I need to get better at what I do with my money, especially since I have family, I have kids, ways to guide them, protect them, and ensure that they have at least a good level of stability. I grew up in Colombia, as maybe I shared that before. Colombia is a country that is considered one of the third world countries, or developing economies, whatever connotation you want to put there. And investing, for example, there is a stock market, but investing is not really popular. Not many people talk about that, except for the people you think are, that we call in English the elites, or the oligarchy, or things like that, which is the wrong way of putting it, right? That social divide in Colombia is very socialist, capitalist, etc. So there's a lot of confusion there. In my family, for example, I come from a my father, especially, not my mom, but my father had a certain level of capital, but he never invested, right? Everything was cash, everything was in immediate gratification. There was no long-term thinking. And as a result, he ended up kind of broke at the end of his days, which was not a pretty picture to see. The investing in the stock market was considered gambling, right? And I think it is gambling if you have no idea what you're doing, which is the same if you go to a casino, you have no idea how the casino works behind the closed doors. So of course you're going to go and put your money and lose your money. When you really take investing as a skill, that's a very different picture. And that's what I have been doing for the past, I would say, 24 months more or less. And it's been very interesting. First of all, it's a super interesting subject, extremely deep, and you can never stop learning, like when you start learning something. And then financially as well has helped me a lot. Just to put things into perspective at this moment, what I have of my own, let's say, my own money is 50% in stocks, 55% at the moment. Then I buy some gold, and then I have some cash reserves and long-term investments in other businesses for around 25%. So it's divided in 3, 50, 20 plus, and 20 plus, 25, 25, let's say, to put it simply. That's how I split my own capital. Other people make it more risky, for example, investing in stocks up to 80% and things like that. I don't necessarily recommend that. That's you need to cover your back. You need to fly from absolute ruin. You need to avoid absolute ruin. That's what I wanted to say. Um, Maya, I'll stop there one second in case there are questions before I move on to a little bit more technical side.
Well, not at the moment, but I'm glad that you mentioned that we have to actually divide our capital into different portions and be very careful how we invest it. And that investing is a skill, because I think that for many people it's more like a gambling, just as you mentioned in the beginning. And it is probably because up until recently, I guess when I say recently, maybe it's up until the past 10 or 15 years, there wasn't really much literature, let's say, about investing, right? And many people had to learn through actually doing it. And of course, it is risky. It can be risky, especially if you don't know what you're doing, what you have to watch out for, and so on. But yes, there is, well, as you mentioned, there is a lot of potential there. It can help actually multiply your capital in the long term, and sometimes in the short term as well, if you know exactly what you aim at, and if you get lucky as well. So we cannot ignore, the luck factor here at all. Okay.
100%, Maya. Luck is very important, and I think it's important not only in investing but anything we do in life, right?
Right. Yes.
Good. Let me then keep going. Now, I could have decided to invest in the United States, for example, which is kind of the obvious thing to do. The S&P, the Standard and Poor index, has always been going up. Of course, it goes down during recessions and it goes during war. But if you see the chart, it's always been going diagonally upwards. Now, in Colombia, or in France, where half of my family is, etc. Right? But those are markets where, first of all, I am not living there. I have no idea of the markets. I haven't studied them. On the other side, for example, I've been living in Japan for almost going into 16 years soon. I know the companies. I work for a Japanese company now. I've worked for companies that serve Japanese companies. So all those names that I am investing in, they resonate. I follow them in the news. I see them in the newspapers, in the Asahis and the Mainichi Shimbun and the Nikkei Shimbun, or the Nikkei newspaper. So I'm much more well informed of what's happening in Japan than what's happening in other countries. That's the reason why I invest in the Nikkei stock exchange. Also, I am, with the population drop and with all the problems that we hear about Japan, I still think that this country is an outlier. Look, for example, at the stance they're taking with the conflict at this moment. It's not just jumping on the same boat with everybody, but taking a more diplomatic stance. And they, even if there is the pressure of the Europes and the United States, the country still has its own way of doing things. And you can ask me about that, because I work at a very large Japanese company at the moment, and it's very different. But I think we should have a podcast about that, because it's extremely surprising and interesting as well. So I invest because I know, or I think I know to a certain extent, the market here, and I believe as well that I can continue learning of the Japanese market more than any other market. Also, there have been changes. If you read a little bit on the subject, so population decline, right, is not necessarily a bad thing. The automatic response would be to say, okay, this is a catastrophe. The country is going to collapse. The economy is going to be terrible, etc. But it's not necessarily the case. If you go to the large Japanese companies, the Mazdas and the Yamahas and Toyotas, etc., Canon, you will find that they have overstaff most of the time because of the culture. The culture here is not and it's true. The not firing people culture, or work for as long as possible, or until the company goes bankrupt. That's a real thing. Now that I am an insider in one of these companies, I can testify. People don't get fired like in the States or Hong Kong. It's not as dynamic when it comes to that. Companies just reduce costs in every single way except firing people. What's going to happen with population decline, or why am I combining this? Because this will force, or that is the expectation, it will force companies to review that, to revise that angle. Not necessarily fire people, but not hiring when there is no need to hire. So efficiency in Japanese companies is going to go up thanks to this. That's one. The capital is going to be reinvested differently, not necessarily in extra headcount salaries, but for example, paying back to the investors in the form of dividends or cash appreciation of the stock itself, and performance of the really well managed Japanese companies will go up, and this will push the stock price up as well. Another point in the stock market is that even at this moment, even with all the rally that we heard about the news and stuff, the Japanese market is still undervalued. So if you compare a Japanese company in let's say industrial or automotive or any sector you want, just make the exercise. I recommend this. So compare an airline in Japan versus an airline in the United States and see the stock price. You will see that the stock price of the Japanese company is going to be a third, if not less, than what the American company is going to cost you. And I'm not talking about the Nvidias or the Microsofts. Those are real monster companies, right? But you compare a normal technology company with a normal technology company in Japan, between Japan and the States, sorry, and the stocks in Japan are really, really, really low. So just I bought a company A that is an number one automotive maker in the world, or number two, I think, behind Tesla at this moment, because the stock when I bought it was what, $14 per stock, right? Which is nothing. So you own and in Japan you need to pay minimum 100. That's very important. So you need a little bit of capital, 140,000 yen, but you can get started in the Japanese market with 100,000 yen, which is less than $1,000 at this moment, right? So I bought this, and now that stock that I bought at 1,700 at this moment is at 2,300, 2,400, and it must continue going up because it's really, really undervalued. Is around, at this moment, is around 55% undervalued. That stock in particular, and it's the general market in Japan. Stocks are still very cheap. They were cheaper 2 years before. I would have loved to go into this. Maybe I would have retired by now because the stocks were really, really, really cheap before COVID. And even during COVID, but there is still the case. You can still find very good bargains there. I'll stop 1 second, Maya, so that it doesn't become a monologue as well.
Yes, to everybody in the audience, if you have questions, you can talk with us here, or you can share them in the room chat, or comments, observations as well. So thank you very much for mentioning, those specific features of the Japanese companies, Francisco, because this is another thing we often, like the foreigners in Japan tend, to, let's say, criticize how Japanese companies, because they never fire people, and there is this trend of having this lifetime employment. So how some people just get complacent, and efficiency is not very high, and so on. But there is, to everything, that happens in life, there is a positive side to it, and it's good that you, pointed it out here as well. So, thank you for doing that, even though it is, just one of the factors that actually influence, will influence the future of the stocks in Japan. But I appreciate you doing that. Yes.
And there's a strong push by the government and the Bank of Japan, the BOJ as well, almost forcing the hand of companies, telling them, okay, instead of holding billions of cash, because most of large, what we call blue chip companies, right, the top 200, 300, 500, they're holding enormous cash reserves that they don't do anything with, right? It's just money in the bank losing value day after day, because it's the safest way, right? Just keep cashing in case of. The really performing companies, which are still not the majority in Japan, they reinvest that either in capital or in people or in leverage or in technology or paying back dividends to the stockholders. So yeah, things are changing thanks to a government push as well. It's not going to be the States anytime soon, but things are better than they were before. Yeah. I did some, as I said, I self-educated myself about this investing thing. So, first of all, what was the Nikkei? What is topics, for example? If you ask any people in the street, nobody has any idea, or I would say 1% of the population, they hear topics and Nikkei, right? Just topics is the whole picture of or the better picture of the Japanese stock market. So there are, if you compare the size of the stock market in Japan versus the States, in Japan it's very small, right? It's a couple of thousand companies we're talking about. Topics covers a large portion of them, not all, but it covers around 2020, I think, or 2030 companies. But anyway, around 2,000 companies. That's topics, right? So if you buy a topics index, it's going to cover around 2,000 companies. Now the index can be topics top 300, top 400, top 500. You can find indexes like that that allow you to put money in all those 500 companies, for example. The Nikkei index is different. It's the top 225 companies, which is comparable to the S&P 500 in the States. So the Dow Jones is going to be the topics basically, and the S&P is going to be the Nikkei. Nikkei, once again, Nikkei is what I prefer. It's 225 companies, and then I found some outliers besides that bubble of 225. But 225 allows me to get some level of growth, or some interesting level of growth in some cases, and also is much more hedged or protected, right? I am not in the age of taking crazy risks or putting all my eggs in one basket, etc. So I take very measured risks when it comes to investing. For me, the ideal would be to make 15 to 20% on my money in the long run, and that would make me very, very happy. So it would fight against inflation and give me some extra capital. And again, if it's long term, which is what I prefer, let's say 5 years, 10 years down the horizon, that compounds, right? That grows by itself without you doing much. So no, I do a lot, but what I mean is not changing and buying and selling all the time, not trading, right? Trading and investing are two very different things. Trading, yes, trading is gambling. Trading is speculation. You think a company will go up in the next 15 days, etc. I don't necessarily do that. I do much more what they call value investing, which is the other school. So you have growth investing and value investing. Growth investing is much more short term. Value investing is more long term. So all these, I educated myself. Just to come back to that point, I bought a series of books, which I strongly recommend. So 2 books by a gentleman, and Maria, we can share them in the resources later, because I think even if you're not going to invest, these books are terrific. So it's 2 books by Nassim Taleb, one called Anti-Fragile and the other called Fooled by Randomness. I love those 2 books. There is another book called Sovereign Individual, and the 4th one is The Intelligent Investor. That is around 550 pages, but it's super easy to read, and it tells you this is what you need to do to avoid the terrible loss. Check these indicators in the stock that you're going to buy. 500 pages, it tells you about the market, it tells you how to invest, when to invest, and how to invest. It's a terrific Bible. And if you go to the Warren Buffetts and the Charlie Mungers and these big guys, they all read The Intelligent Investor by Benjamin Graham. So I can only recommend very, very strongly these 4 books, Maya. Now, how do I invest? To just get on the practical side, and then I'll make a pause. I buy two things that are securities, or what we all know as stocks. So pieces of a company, right? And I buy ETFs, which is exchange trade funds, if not mistaken, ETFs. And I'll explain briefly what the difference between these two are. So a stock is, once again, it's not a receipt, it's not a piece of paper, it's a portion of a company. It's 0.0001% of a company, for example, but it's an actual portion of a company. So that makes you owner to a certain extent of a company without being part of the board. When your level of stock holding surpasses a certain threshold, then even you have power to tell back to the company, write back to the company, I agree or I disagree with your strategy. Let's vote. And what I have been surprised is I get communication in the mail from some of these companies asking me to vote at this moment, right? Which is super interesting. I don't know in reality if they consider my vote or not, but they're legally forced to do so, right? When you're a stakeholder and you submit your vote, it has to be taken in consideration by law. If the company does it or not, then that's another story. But I think that I appreciate the fact that my opinion is being asked about the future of X company. So now that's stocks, right? It's a piece of a company. ETFs is different. It's indexes, basically. That's to put it somehow, is what you used to do in the past. You go and you put an index of the S&P or an index of crypto or an index of gold, for example, right? Is a representation of that value in the market. And I buy at this moment 4 of those indexes, ETF. One that is in for the S&P, so that I have some money just there without me thinking about that. It's just in the S&P in the American market to give me some diversification. And then because I like the industry very much in semiconductors, so it's the major companies in semiconductors in Japan grouped. It's around 30 companies of that, and that's an index. And an index in gold as well. So the physical value of gold. So those, so it was three indexes: S&P, gold, and semiconductors. Now, the beauty of the ETFs is that they are held as a stock. So, for example, if you go to a bank or a financial institution and you say, okay, I want to have an index, you must keep that index for a minimum period of time. Let's say, I think minimum 5 years. I'm not sure. I've never held an index, but it's long term, right? It's 5 years, 10 years, 25 years. Now, when you go to an ETF, it's like holding the index, but it belongs to you and you can do with it whatever you want. If you want to buy today and sell it tomorrow, you can do that with the ETF. So that's very practical, right? It was a way of allowing people who cannot invest long term to invest in indexes short term. That's why it was manufactured. So I invest in those two things: stocks and ETFs. Maya, I'll stop there. I still have a little bit more of content, but let's stop there for a second.
Yes. Okay. Thank you. We have a comment from Conrad here in the room chat, and Conrad says, traditionally Japanese public companies used to have too many cash reserves. We're going back to a little bit earlier, and they
still do, Conrad.
they still do too. Yes, and they have cross-holding structures that make things complicated. I agree that many good companies with good values, just not sure when will their beauties be discovered by the market. So this is the comment we got from from.
And I think it's spot on, that comment from Conrad. Yeah.
Yes. Yeah. So thank you very much, Conrad, and that's very true. Actually, we saw. Actually, it is interesting. I was talking. I will deviate a little bit from the topic of investing now. But during the pandemic, many Japanese companies actually got handouts from the government to keep their their employees at home. To keep them work from home. So I was talking with my husband at that time, saying that, but these companies, they sit on piles of money. So those, reserves, monetary reserves they have, and still they get handouts from the government. So to me, it was just beyond, I don't know what to say, but very interesting, actually, a phenomenon. But, I would say was very, let's say, unique to Japan. So, and I may be mistaken here, okay, because I don't have any data on this, but I believe that for some Japanese companies, the pandemic actually helped them increase those, reserves. However, this is just an observation, and I may be mistaken, but let's go back, to the topic of investing, Francisco.
Got it, Maya. So there are many ways at this moment in Japan is a blooming market, I would say, investment. So there are companies popping up all the time about investing with names you've never heard of. Look for a reputable institution. It doesn't have to be the Mitsubishis or anything like that, but look for a solid institution. Read a little bit about the what returns it has been giving or what kind of care. There's tons of information in the internet about any company, so just do your research before you give your money to anybody. And there are many foreign companies as well that open shop here in Japan, 2-3 people in a room. Some of them do very, very well, but some of them just go bust. So just pay attention who you hand your money to. I personally use SBI. SBI Securities, or SBI Shoken. It's a company that was founded in the early 2000s, I think, the late 1990s, if not mistaken. It's very solid. They offer insurance, they offer stock market. They're specialists in net banking, so it's quite reputable. I have no worries that my money is going to get lost or frozen, at least until now. So SBI Shoken is still in Japanese because it's for the Japanese population. But once you get used to it, even if you don't read Japanese, once you get used to the screens, it's quite easy and user friendly to navigate. I have an app in my phone, of course, and that's how I check the market every day, etc. So that's how I do it. Now, there are plenty of resources out there to educate yourself and to learn. Of course, you have the YouTubes and the Twitter, now called X, etc. But I use a couple of very punctual resources to help me navigate that. And it's free, because then you get lost in 1,000 things, right? I use simplywallstreet.com. Simplywallstreet.com. So Simply Wall Street is just an information website. I pay a fee. I pay around $10 per month or something like that. But it has all the information of the Japanese stocks and the foreign stocks. It has the information of around 15,000 companies, they say. But of course, well, each time I look for because I compare sites as well, and many of the big sites in English, they don't contain a lot of Japanese companies. This one has them all, right? I look for a small company, I don't know, in Nagoya with a ticker that nobody knows, and it's in simplywallstreet.com. So it's super, I find it great, and it's very graphic, right? It shows you all the indicators and all the different measuring points, and we will talk about that in the last part of the conversation, how to really measure a stock. But yeah, Simply Wall Street, check it out, is phenomenal in my opinion. Number two is Nikkei, right? So the Nikkei Shimbun, or the Nikkei newspaper, there is two versions. One that is for the general public, and another that is for investors, actually. So if you go into Nikkei Asia and you check investing, then you have plans. And the plan, I don't buy the plan for the Nikkei. Just to be transparent here, you can buy the plan for $100 per year. At this moment, they have discounts and everything, which is 8,000 yen. It's not, 12,000 yen or 14,000 yen. It's not that much, but you get most of the information that is free. That will help you navigate. Unless you really want to become a professional investor, then I can only recommend that you buy the subscription to the Nikkei, to all the articles that they have there, because the information they have, it is ranked as one of the best in Asia, right? Not only in Japan, but in Asia. I get news on my phone every morning, so I have the daily updates, and it tells me what company A, B, C, D is doing, not only in Japan but in the rest of Asia. So the Nikkei is a great resource of information, of valuable information. And the final one is called Seeking Alpha, if not mistaken. Seeking Alpha, right? Alpha is the upside of a stock. Beta is the downside, basically. So this side that is called Seeking Alpha, what they do is not so. Then in case for news, Wall Street is for Simply Wall Street is for the indicators. So how is the debt of the company? How is the revenue of the company? What is the net margin of the company? What is the capital expenditure return, for example, right? So that's technical analysis a little bit. What Seeking Alpha does is that they compile and gather articles by stock analysts around the world about different companies. So, for example, if you go to Seeking Alpha and you type Nintendo, right, you have the latest 5 articles of stock analysts that tell you why you should or you shouldn't invest. And they have both, right? They have people who are bullish or people who are bearish, people who are pro the stock or against the stock. So if you read 2 or 3 articles of Seeking Alpha, then you can make your own judgment. That's the idea. It's not to blindly follow what the analyst is telling you, but you compare the 2 sides of the picture, and then you say, okay, it's worth investing here because X and Y. Sometimes what happens is that all the analysts, the 5 different reviews or reports, they tell you, look, it's amazing. We all concur that it's an amazing stock. It's up to you then to decide if they're telling you the truth or not. But Seeking Alpha, if you want to go a little bit deeper into the rationale of why it makes sense to invest in a certain company, is terrific. Check Seeking Alpha Nintendo, and I think you can find some free articles as well. And it's super comprehensive, easy to read, easy to understand, and it tells you the picture of the past, present, and future of the company. So those 3 resources are really worth triple of what they're charging at this moment. I think Seeking Alpha as well, you can, for $100 per year subscription, you can get all the information that's available there. So that's what I use, SBI Shoken, and then those 3 resources to inform myself. And of course, I talk to people, I check with my customers, I check with the customers of my customers, I look around the market, I walk around the city a lot. I love walking, and walking is a very good sign because you see all the publicity that is in the metros, what's active inside and outside the public transportation and the sites that you visit. So instead of just walking, thinking about your thoughts, just check what's on the walls of Tokyo, and that can give you a very good indication of what's happening in the market as well. When you go to a Shinkansen station, for example, you will see publicity of certain companies you've never heard about, and it's quite interesting because some of those companies are in the stock market. So company X that makes, parts for auto, right? But you've never heard about that company, and it's a company that has grown 500% in the past 3 years, right? Jewels like that you can find if you're a little bit curious of what's happening, not only on TV, but advertisement as well. So I can only recommend that. Yeah. Let's talk a little bit about the stock analysis, Maya, if everybody's okay.
Yes, it looks like everybody's listening very carefully. I am too. I'm taking notes because that information, the information you're sharing, is very well useful. Not only useful, but I believe that it helps. Yeah, useful. Anyway, helps a lot. With people who are in the beginning of investing and so on. So thank you very much for sharing, and thank you also for giving the resources of information. I was going to ask you actually. I had a prepared question for you about the company which you use to invest, but you already gave us, the
Mm-hmm.
company. So, but if I can extend on it a little bit, do you think that using only one company is good, or should people think actually of using, let's say, one more company, one more, let's say, because you mentioned that you use the SBI Shoken, do
Yeah.
you think that it would be beneficial to actually use one more company and invest through another one?
I think is a good point, Maya. I would do it if I haven't thought about doing it because again I have my cash, gold, and stocks. That's how I manage at this moment. But if you have the means, first of all, and if you want to use this, two companies, you can never go wrong by covering your back, Maya. So yeah, it would be a good safety mechanism to protect your investment.
Great.
My wife, for example, my partner, my wife, she uses Mitsubishi, right? And I use SBI Shokan. And then for the let's say more passive investments like the 401k or the yeah, I don't know how to call that, but yeah, 401k. I hope is a long term pre-retirement investor. We use other companies, right? So she uses SBI, and then I use Mitsubishi for those long term investments. So like that, we diversify a little bit the risk.
Yes, yes. Thank you very much for that, for letting us know. Okay, so shall we continue?
Yeah. Before we go to technical analysis, which is going to be the last 7 minutes, let's say 8 minutes. One point about dividends, Maya and everybody. So dividends, your stock, you make money in two ways, right? Number one is the appreciation of the stock. So very simple to understand. The stock, you bought it at 1,000, and now is trending at 1,200. Sorry, trading at 121314. So you made 400 yen for your stock, and of that, if you want to cash out, you need to pay 20% to the Japanese government. 20, 24. Anyway, it's between 20 and 24%. Sorry, but I think it's 20% of capital gains to the Japanese government authorities. What happens with most of the accounts at this moment is that it's automatic, right? Which is really practical. Before it was not the case, right? So you had to calculate yourself or with your accountant, and then pay taxes. And if you made a mistake, you risk the tax authorities coming to knock on your door and saying, okay, you haven't paid capital gains. So just remember, capital gains. You bought a stock for 1,000. You make, let's say, 1,500. You need to pay 20%, which is 100 yens of those 500 to the Japanese government. So your real gain is going to be 400 yen. So that's one way to make money with the stocks, the stock appreciation. Remember, of course, stocks depreciate as well, so you will lose money, but you will lose only what you put in the stock, which is really important to know. When you're trading as well, you can do something called short. I don't know if you've watched this movie called The Big Short. Again, recommended. Check it out. It's about the financial collapse of the United States in 2008, and it's called The Big Short for a reason. Um, Shorting means to bet against a company or against a government, for example, or an economy itself, right? So what many people did during the 2008 financial crisis was to bet against the economy of the United States. So they shorted. Short equal bet against. Okay, so they shorted the American economy, and they made billions of dollars when the economy collapsed, right? And you can do that, but it's extremely risky because there is no cap on what you can win, but there is also no cap on what you can lose, right? The difference with long-term investing or investing is that if you put 1,000 yen, the maximum you can lose is 1,000 yen, right? So please don't short if you have no idea how to do it. If you're a trader, be my guest, and if you're arch millionaire, be my guest. But invest, don't trade or short stocks is a strong recommendation. Yeah. So about one point about dividends that I want to say. So one is the capital gains or the capital appreciation of the stock, and another one is dividends, right? Most companies, I have as a rule, except for the indexes, but I have as a rule to invest in companies that pay dividends. The reason is the following, right? some companies tell you, yes, we don't pay dividends. So dividends is extra money that they pay to the stockholders, or kind of an interest on your investment, basically. Some companies tell you, okay, no, we don't pay dividends to you because we reinvest the money to make the company better. But that's up to you to trust the company or not. Are they telling me the truth? Are they going to reinvest in the company in technology that I think is important, for example? Or they're just going to keep the cash for themselves and in reserves like most Japanese companies do? So I don't fully trust, so I prefer companies that pay me a dividend. Dividends can go from 0.1%, for example, of the capitalization, to, I think the maximum payer at this moment in Japan is around 6.7 or a little bit higher, maybe 7%. So what I have seen is 6.7, but there might be a little bit higher than that. So that means 6.7% return on capital of the company as a whole, right? So let's suppose you invest 10 million yen, you're gonna get 3% or 4% or 4% of that money in the form of dividends, right? From the different companies, and each company has a different dividend percentage. So my sweet point or my sweet dividend preference is between 2 and 4%. So 2 is not too low. A 1% or 0.5% doesn't make any difference in my economies. So why would I spend time? So 2% is very good, 3% is very good, 4% is a little bit limit suspicious. And I tell you what, a company that is paying a lot of dividends, let's say 7-8%, there are companies in the States that paid 9%, it has been proven historically that it's a short-term alternative to keep investors, so not to let them go during times of financial distress. So the companies just pay more so the investors don't escape, but actually the stock is going to collapse very soon or has big risk of collapsing very soon. So don't go with dividends that are companies that are paying 7%, 8%. It's too good to be true. Just the same really applies in this case. Now, quickly, a point on what to analyze, right? There is one indicator that is golden, I would say, that is the PE ratio. And I invite you to investigate a little bit about the different indicators. PE ratio basically is how many times people are valuing the real value of the company. And to make it simple, let's say the PE ratio of a company is 1. It means that the valuation of the company is the same as the valuation of the public or the analyst, 1-to-1. But if you have a company that has a P ratio of 30, it means that people think the company is 30 times more valuable than its actual market cap. So if a company costs $1 million, people are saying, no, this company is not $1 million, it's $30 million. But what is that based on? Speculation, right? So that's risky. When you see a very high P ratio, just beware. And I'm going to just mention the ratios because we don't have a lot of time, but do some reading or we can have a technical analysis second call. More than happy to go into that subject. So one is P ratio. Number 2 is the profit margin. So the net profit margin, not the operational, but the net profit margin. Liabilities over assets. What amount of debt a company has. There is a certain amount of debt that is healthy. Beyond a certain threshold, the company might go bankrupt. So just be careful. Return on equity, which is basically return on the value of the company, and return on capital expenditure. That is how much the company returns on each dollar or each yen that is expending that is reinvesting in the business, basically. And finally, is ownership by individuals, right? Most of the companies are owned partially or largely by funds like BlackRock, Vanguard, etc., or the Bank of Japan and other institutions. But if you have a company that is at least half owned by individuals, that's a very good sign, right? It means that there is still room for improvement and that it's not just taken over by financial institutions out there. Again, I'll put these 5, 6, 7 indicators that I use, and you can read about them in more detail. Maya, I'll stop there because I have like 2-3 minutes. If there is any question or comment before we close.
Yeah, thank you for that. So there is a question actually. The question is, can one invest in the Japanese stock market from Africa? If so, how? And then Conrad answered that, is there an interactive broker in your country? Does an interactive broker operate in your country? If so, you may give it a try. And then Tetsu says, yes, I'll check it out. And thank you. So, Chao, thank you very much for taking care of that answer. Very much appreciated. And also, okay, Francisco, I have a question to you. You mentioned all these, the ratios, the net profit margin, the return on equity, also the debt to equity, and also, the ownership.
Mhm.
Are these, I mean, the figures, these ratios, are they available in the resources that you mentioned, like Seeking Alpha, for example, or Nikkei for investors, or the...
So in Simply Wall Street, they're available. All of them are there.
Okay, so that's important to note. So people who want to see them can just subscribe for Simply Wall Street.
Mhm.
And
So I recommend use Simply Wall Street for around 1 or 2 months, just to play around with it, and you have like a certain level of information you can see, and then you pay the subscription to see the whole thing, right? That's but you get a limited number of resources per month, like 5. You can see 5 companies per month for free. But if you want to see more than that, which I do, then you pay the subscription.
I see. Wonderful. Well, thank you very much for that information. And as you said, it's time for us to actually say goodbye for today. Definitely we'll continue the conversation. Francisco, I know that you're busy, your work schedule and everything, there is a lot for you to do, but we're going to continue, definitely. So if it depends on me, hopefully you will be, on board.
Well, happy if there is. It's a subject that honestly is fascinating, and I can tell you, for example, about which companies I'm investing right now. I have no problem telling that. Sounds, yeah. I don't work for any of them. I'm going to check if legally is possible or not before doing that. But we can talk about industries, for example. Why I think industry ABC is interesting or not. What about dividends of the different companies? A little bit more technical on each one of the indicators. We can have another call on that, Maya.
Wonderful. Let's do that.
Yeah, and thank you so much, Francisco. I really enjoyed the presentation. You captured my interest. I am intrigued, and I'm looking forward to.
You're going to start investing too.
But it's still an interesting topic. I just find it fascinating, and so thank you very much. It's like really practical information, and I think other people found it really valuable. So thank you so much, and I look forward to chatting about it in the future with you.
But by the way, in my LinkedIn, I have notes of the intelligent investor. So if you go to my LinkedIn profile, and it's free once again, you just click on buy my book, but it's for free. You click on it, and then it takes you to a site where you can download my notes on that book, basically. And it's around 20 pages, and you can start studying on that. It's super cool.
Very good.
That book is golden, really.
Yes, thank you very much. So to everybody here, I encourage you to do, to go to LinkedIn and do what Francisco just said. And that's a free resource once again, which is important, and I believe that it will be very helpful if you're in the beginning of the investing journey. Great, thank you very much. Francisco will continue, and to everybody here, have a great Wednesday. So we'll be here once again on Sunday morning with Japanese Politics 101, and next week on Wednesday at 8 o'clock. Thanks.